Hi everyone, thanks very much for checking out this video. This video is about a recent investment we made in a company called Inmode. So let's just get started then. Right, let's start off with what Inmode does. Inmode was founded back in 2008 and is based in North Israel in a city called Yokneam, away from Gaza on the West Bank. Inmode is a medical technology company that specializes in developing and marketing minimally invasive aesthetic and medical treatment solutions. And as such, they offer a range of devices and platforms designed for various aesthetic and surgical procedures. So let's take a quick look at some examples of their products. Here we have an example of a machine that's used to tighten the muscles and burn fat. And over here, we have an example of a microneedling device that's used to tighten the skin and get rid of wrinkles.
Right, so let's talk about why we invested in Inmode. And to do that, we thought it would be best to show you some charts. Firstly, we can see that the company has high and consistent growth in revenues, which is great. Secondly, their net income is growing a lot as well, which is also great to see. Thirdly, we can see that the return on equity is also very high. It's above 30% in every year. And if a company has high return on equity, it means that they can reinvest into the business and keep growing at a high rate, which gives you that compounding effect as an investor. So this is great to see. And then moving on to debt, we can see that they have very low debt. I mean, the highest number they ever had was around 1.1%. And this is good to see because it means that the company is generating a lot of revenues and net income without any debt. And that's a very impressive feat for any company, especially a young one. And then moving on to free cash flow, we can see that they're also generating a lot of free cash, and it's growing in a high and consistent manner as well. And usually for young companies, to see them generate this much free cash flow is not normal, but it's very good to see. And it means that the company is able to turn their profits into cold hard cash for us investors. So we are very happy about that. And then the last chart we're going to look at is the price to earnings ratio. So we can see that that has dropped a lot over the last few years, and that is because the share price has dropped. And it's down near historical lows, even though the timeline is quite short. But it's now currently around 10, which is very low for a company that is growing at that rate. So this is very good to see as well. So with that being said, we're going to move on to our investment. So based on our models, we estimated that the fair value of Inmode would be around $50 per share. And we bought shares at $22.75 in December of 2023. And we allocated 5% of our portfolio to this investment.
And moving on to the risks. So as mentioned earlier, Inmode is based in North Israel, which could pose some risks due to the war, but so far it hasn't been affected by this. And secondly, Inmode is a relatively young company, as we've mentioned earlier, being founded back in 2008. And therefore, it doesn't have a long track record of proven results versus the companies we typically look at. And that wraps up our risks, and that wraps up our analysis. And thank you very much for listening, and goodbye.
Thank you. Bye.